This is the emergency podcast. Please pay close attention because things are changing rapidly. I was watching CNBC. They're talking about, we're coming in for a soft landing and don't nobody worry. And, I'm going, holy mackerel. I'm talking to my friends. Yeah, we don't have to worry. Economy's doing fine and all this. I said, but what about, they don't see, they took the ceiling off the debt. And now the debt is skyrocketing. I said, so people don't see the debt that's piling up. So they think everything's fine because the moment they took the debt ceiling where they did, stock market took off again. So everybody thinks happy days are here again. I cannot believe what they're doing. And now the BRICS and all this is happening. So Andy's going to put the thread and needle to string it all together so it makes more sense because this is global. It's macro. The problem is you and I cannot see it. It's invisible to us. And my teacher, Dr. R. Buckminster Fuller, says people cannot get out of the way of things they cannot see coming towards them. So Andy is very intelligent. What do you see happening?
I see a confluence of events that are coming together at the same time. And, I think it's very important to acknowledge the fact that the reasons behind the banks running into trouble have not gone away. And at the same time, you could argue that the forces outside the country, the continued de-dollarization and the bombshell announcement made by your friend Jim Rickards a couple of weeks ago that the BRICS nations are supposedly set to announce to the world their new currency, which he anticipates to be backed by gold, as we've talked about, the only other tier 1 reserve asset. These things are rapidly coming to a head, and I think it's something people need to be cognitively aware of because the world's about to change if he's right.
And the reason this is so important is, number one, Jim Rickards is a man who has seen it from the inside in. He was with LTCM, Long-Term Capital Management, that collapsed. You may want to consider taking some evasive action. First move was to cut off the Keystone XL pipeline. First move. And that sent inflation. I sell hard oil. I don't have oil stocks. I have oil. So oil went from $30 a barrel to $130. Inflation went through the roof and blamed Saudi Arabia for it. The American people, we have such a great leader. Well, he's killing our country. Another term you use quite often is called weaponizing the dollar. How do we weaponize a dollar? That's what Rickards is saying about currency wars. So what does that mean to you, Andy, weaponizing the dollar?
It's very simple, Robert. To me, if you are the world reserve currency, you're supposed to remain neutral as it pertains to world events and the usage of the dollar. You can have your own views, but if you are the administrator of the world reserve currency as it pertains to who can and who cannot use the dollar, really, in my opinion, should not be up to anyone for that matter, especially the people that are administrating the currency, because what it does is it creates favorites in the minds of many, and it also creates anxiety. And by kicking Russia out of SWIFT, by saying to them, you can no longer use the SWIFT system, which is the oxygen needed in order for money to transfer around the globe, and worse yet, sanctioning and, in essence, confiscating their assets, we have created an environment where instead of just being the administrators in an impartial manner of the world reserve currency, now we are telling the world who can and who cannot use it. And I think that has created the incentive for many, many other countries around the world to strongly consider breaking free from the Western system and taking a look at what the BRICS have to offer.
Okay, so weaponizing the dollar means when the dollar was a reserve currency, it was supposed to be as good as gold. That goes back to 1944, the Bretton Woods Agreement. So it's supposed to be neutral, like just gold. And that's what the reserve currency of the world meant. And since we were supposed to be neutral, everybody's supposed to be able to trade back and forth using the dollars. And this is what Jim Rickards was talking about in currency wars. He says they're going to start using money to fight wars now. And so it's all coming true. But the average person with their head up their butt can't see it coming. They're still wondering who's going to win the Super Bowl next year. And it's important. But anyway, they cannot see what's coming. So they're weaponizing the dollar. They use it against Russia. They try to crush Russia's economy. And also, Biden did something to Saudi Arabia. What do you do to them?
Well, he alienated them. He told them that we were going green. And as a result, on top of signing a contract, as we've talked about, a military agreement with Russia, they have joined the BRICS.
Saudi Arabia joined Russia. The reason that's important, because what Andy talks about in 1974, the U.S. dollar became the petrodollar. Since the dollar was no longer backed by gold, because Nixon took the dollar off the gold standard in 81, they made the dollar backed by oil. That's why it's called the petrodollar. That was 74, I believe. Is that correct?
That's correct. And it was the protection of the Saudi kingdom that, by extension, gave the dollar its hegemony. You protect us, or Saudi Arabia and the rest of the OPEC community will value and price oil exclusively in dollars.
Hang on. We promised Saudi Arabia, the U.S. did, that we would protect them. He pisses off the Saudis. They weaponized the dollar against Russia. And Saudi Arabia finally says, well, we're going to fight you then. They joined Russia's side. And that's this whole coalition called BRICS, Brazil, Russia, India, China, South Africa, and possibly Japan and Mexico joining them. So there's a war going on using money.
Absolutely, 100%. And not only using money, I think pushing away the one entity, that being Saudi Arabia, that gives the dollar its unique standing on the globe, telling them that we don't need them anymore. We are going green. By 2030, we're going to start making strong strides in going green. And so we are pushing them away from wanting to continue to price oil in dollars.
I mean, there's no way. I mean, you can talk about oil, and you can talk about air, you can talk about coal, you can talk about solar, but we're still going to be using oil for quite a while yet, because my degree is an ocean transportation minor in oil from Kings Point Merchant Marine Academy. And what we were taught at the academy was that civilization runs on energy.
And I think that, boils down to me to one simple equation. According to the balance sheet of the United States government, the assets that we have are $5 trillion. That's it, $5 trillion, of which 42.3% of the assets that the United States government holds, 42%, is student debt. And on top of that, we have 151 trillion in liabilities.
Student debt went through the roof. Now it's our biggest asset. It's our biggest asset. I mean, we're bleeding the pockets of our students.
41% of the assets of the land of the free represents 41% of all the assets of this country is on the backs of our children. And that's 5 trillion in assets backing 151 trillion in liabilities. And so the question becomes, how do you pay that off?
It's not possible.
What I've studied in Austrian economics tells me that every time you see inflation throughout history, it's an increase in the money supply. And that's exactly what we have done over the last several years, printed more money than in the history of the country preceding it, creating these problems, these distortions. The question is, how do you ever print yourself out? How do you get out of 151 trillion in debt with 5 trillion in assets?
How long is a trillion seconds?
31,688 years ago. You've got Neanderthals walking the plains of Europe a trillion seconds ago, and we are $151 trillion. And so the question becomes, going back to this reset, how much of this is intended when the top economic advisor to the administration advocates this? And the two things that you could do if you wanted to lose the reserve status, the only two things you need to do: push Saudi Arabia away, weaponize the dollar, make everyone think, are we next? If we don't fall in line with what they want, are they going to take our stuff?
That's like a bank. You have a house and says, guess what? We're going to pull your loan and you're going to lose your house now. That's kind of the meaning of weaponizing the dollar.
And I'd like to add one other piece to that. What do people say backs the dollar's value? Forget about oil. It's the full faith and credit in the U.S. system. Well, in terms of credit, we are insolvent and broke. We're $145 trillion in the hole compared to assets versus liabilities. And in terms of faith, I'll just simply say, how many people trust this country just simply upon looking at the way justice is perhaps not equally distributed, just looking at our current and previous administration, without even going down that hole? The world notices this. There are a lot of people who have come to this country seeking a better life, largely because they believe that you have a justice system that looks at everyone equally and opportunities for success. And I think that really, when you talk about trust, and you talk about trust of the West versus what the BRICS are trying to do, I'll just simply say this. If Jim Rickards is right, and I believe he is, I've been saying it for 3 years, and they issue a gold-backed currency and use the distributed ledger technology that the Chinese have mastered over 4 or 5 years with their digital yuan.
Ledger technology is also known as blockchain.
So you show what every country that has signed up for the BRICS is going to peg to the blockchain. And if you do it right and have it audited by independent auditors, you now have trust. And in other words, trust is not in our past, it's not in our words, it's not in any of this. Trust in terms of the BRICS, maybe people don't trust China and Russia so much, but trust is gold and immutability of a blockchain. And if you have it independently audited, you immediately have gained a large portion of the world's trust in a system that is sorely lacking trust these days when we look westward to us.
China's already using blockchain. The possibility or what you think is coming is the BRICS, Brazil, Russia, India, China, South Africa, possibly Japan and Mexico are going to say, we're going to shift to a gold-backed yuan. And my question to us all over the world, what does that mean to the dollar? You and I, who our mortgages are based in dollars, or credit card or car payments, our paychecks are in dollars. You're calling for a thing called a reset. So we heard what weaponizing a dollar kind of means. What does reset mean to you?
Reset means to me, we realize that by raising interest rates to 5%, we put great strain on the banking system. And you can see that. And you could see if it went up just a little bit more and a little bit more, what kind of strain that would put on the system. A reset to me is an environment where a decade plus of suppressed interest rates and easy money created massive distortions in asset prices.
That's the recent past since
Correct.
2008.
Correct. So we've had massive distortion in asset prices that have pushed prices stratospherically high. One should question whether or not price discovery is valid anymore, and I don't think it is in this environment. When it will be is when interest rates rise high enough. Going back to the comment of it being Putin's inflation, to me, they were looking for a villain to cast away the focus of what the Federal Reserve has done by creating so much money and suppressing interest rates and creating these distortions. To me, the villain now, by pushing Saudi Arabia away, by weaponizing the dollar, making everyone think, hey, maybe we should switch teams. Maybe they're focused on us next. They have created an environment where the rest of the world, if indeed Jim is right, and they issue a currency backed by gold, and at the same time, Saudi Arabia says, you know what, we're going to take the new BRICS currency for oil. We're no longer accepting dollars. And that's not so far-fetched. Hey, Iraq just made trading in dollars illegal, punishable by prison. And so when you talk about that possibility, remember, every single country in the world for the last 50 years has had to stockpile dollars to buy oil. If that happens, and now you have a gold-backed currency that is being issued amongst the BRICS nations, and you have all of these countries joining together, which represent north of 80% of human population, not going green. And we are. And Saudi Arabia says, thanks for the memories, and they dump dollars. Why, yeah, those dollars come home hitting our shores with a tsunami of inflation. And when that inflation hits our shores, the byproduct of it is interest rates spiking. This is not something the Fed would be able to control. This would be the back end of the bond market going straight up, the 10-year and the 30-year, straight up. You can't have 15, 20% inflation with 5% interest rates. In other words, it is an event that would trigger massive inflation and massive spike in interest rates, which is inversely correlated to everything in this country that makes people feel wealthy, stocks, bonds, and real estate. And the best part about it is now you have a villain to point to, Putin, Xi Jinping, and OPEC. And much like calling inflation Putin's inflation, this would be Putin's destruction of the system.
And they win.
The West wins. Now everything resets. And at the same time, the banks would collapse because you have interest rates going to the moon. The banks would collapse. And isn't it interesting that the number 2 advisor to the president is Lael Brainerd, whose whole premise is removal of the banks completely and totally, and all commercial bank accounts transferred to the Federal Reserve in a central bank digital currency. She's a modern monetary theorist. So your top 2 advisors, one gets rid of the banks, one gets rid of the reserve currency. Is it coincidence? I don't know. Look what's happening.
And once again, ladies and gentlemen, it goes back to what's our biggest asset, student loan debt. And the thing that's interesting about all of this is my teacher, Dr. Buckminster Fuller. He says the problem is humans cannot get out of the way of things they cannot see coming towards them. We're doing our best to make the invisible visible in your mind. We're so screwed up. And we've got to be very careful at this moment. The weaponizing the dollars, the reset, and what can we do, most importantly?
To me, the reset is simply a massive increase in interest rates, which will create an implosion of stocks, of bonds, and real estate, which are all coming from very high values, which are inversely correlated to a spike in interest rates. That's really the biggest problem.
The reason they were so high in value is because after 2008, what was his name? Bernanke? Was he a Fed chairman or something? Won the Nobel Prize in economics for destroying the world's economy. I mean, what idiot would give that crook a Nobel Prize in economics but another crook? I can't believe this stuff. Interest rates go down, prices go up, and now what goes up, going to come down.
When you ask yourself, why do this? Well, if you have 151 trillion in debt, and as rates rise, it becomes more onerous, maybe they realize that this is just, you can't pay it off. And so you inflate or you default, or maybe the third option is you blow up the system but point to a villain, and then you issue your new central bank digital currency. Now, look, every single country has been told by the Bank of International Settlements that you must have an operational CBDC by 2025. Right now, all of the countries that represent 95% of global GDP are either in beta testing or are in production of a central bank digital currency. It is real and it is coming, as far as I'm concerned. And of course, when you look at the comments coming out of the International Monetary Fund the other day, it becomes increasingly more obvious not only that there's a central bank digital currency coming, but maybe they notice what's going on with the BRICS. As Kristalina Georgieva, their head, came out and said, the head of the IMF, and said, hey, central bank digital currencies really need to be backed by something in order to be considered legitimate. And what is the only other tier one reserve asset in the world? Oh yeah, that's gold. And what have the central banks been buying more of than at any time in the last 18 months? Gold. And so the high probability, after issuing a report by the IMF recently that said gold, an international reserve currency, a barbarous relic no more. So you have acknowledgement by the IMF that not only CBDs are coming, it has to be backed by something. And it's interesting, their take on gold, which runs very parallel to me with what you will see coming out of the BRICS nations. Maybe it's a little bit of foreshadowing in terms of creating a parallel system with transparency and trust away from the current system that lacks both.
I think it's interesting. I'm looking at the prices of gold and silver. I was buying silver at $50, it's still $50. And then back in 2000, I think gold was 300 and people are still saving dollars. I mean, if you've read Rich Dad Poor Dad, said savers are losers. Why would you save something that they're stealing from you every single day? You keep that dollar in the bank. It's because your teacher told you and your mother told you that you should save money in the bank. And that's where your money is being stolen. I can't believe how stupid people are. I just cannot believe it. Can't you see what's happening? I mean, can't you go to the supermarket and see the tuna fish that was 50 cents now is $1? And what Andy is saying here, that if and when switched to this global currency, trillions of dollars held in reserve, because the US dollar used to be the reserve currency of the world going back to 1944. Those dollars have to go somewhere, and they're either going to go into gold or they're going to come back to the U.S. Is that what you're saying, Andy?
100%. It is. And it's interesting that you say, why would you leave money in the bank? Which brings me to another question. Silicon Valley Bank failed. 72 hours before the bank failed, the Fed Chairman Powell came out and said, all is fine. There's no problem. It's reminiscent of Bernanke saying all is fine. And a few days later, the subprime crisis happening. Well, here he said all is fine, but I just want people to think about this for a second. And I don't even know what I'm trying to get at with this, but just simply to talk about risk management and to talk about regulators. Where the hell were the regulators and where was the risk management in the fact that, you Google this and see it, just blew my mind when I saw it, the top 10 checking accounts at Silicon Valley Bank, and these are massive venture capitalist funds there, right? With very strong political ties. The top 10 accounts had $14 billion in them.
A checking account?
Yes, these are the corporate accounts. And they had $14 billion amongst the top 10 accounts. Now let's just break it down. Number one, FDIC insurance, $250,000. So if you have $1 billion in your bank account, are you stupid enough to leave all of it in a checking account for what amounted to almost 3 years? These accounts since 2020 had been that high, leaving billions of dollars amongst the top 10, just the top 10 in their accounts, and risking all of it to a bank failure and Not only that, how about what were the rates we were getting in checking accounts? Even today, as rates have gone up, but what were they then, 2020, 2021? You're talking less than probably 1/5%.
Right.
So where were the regulators and where were the risk management saying, why aren't you putting the majority of your money, guys, in 30-day treasuries or 60-day or whatever, and take the risk away from the banks, all of it, instead of having only $250,000 insurance? You have it now, all of it backed by the faith and credit of the U.S. government, earning many times the rate that they were returning in a checking account. Just ask yourself why.
They could have put it in treasuries, what you're saying.
Yes, and I just want to know why this isn't being asked more.
$1 billion in a checking account, not insured? You gotta be crazy. I go to college. I went to Wharton. I paid for my college degree. Well, that's how stupid these guys are. I cannot believe it.
And not only that, the Fed is supposed to keep track of this stuff. So the Fed knows the massive bank account balances. They track it. They know the largest individual family bank accounts in terms of individuals. They know the largest bank accounts in terms of corporations. You can go to the Fred database and pull this stuff up. But where were the regulators when they see these types of accounts? They're telling all of the banks they don't need to hold any reserves. And to make that a little more clear, during the pandemic, the president told the banks, you do not have to hold any reserves at all. So these banks have nothing in the way of reserves. And every time you make a deposit, it has to be offset with an asset. And the asset that they chose to offset with, predominantly U.S. Treasuries earning 2% or less, and mortgage-backed securities paying 3% or less. Now, I saw today that a 30-year mortgage is 7.5%. So it's lost over 60% of its value. And the 10-year Treasury is around 4%. It's lost 50+% of its value. So ask yourself this, if the regulators see these oversized, massive bank accounts, and they're raising rates at the fastest level ever, which puts massive strain on the bank's balance sheets, why is it that 72 hours before all hell breaks loose, they tell us everything is okay? Should we trust the Fed? Should we trust the regulators, the ones who failed to anticipate inflation, and when they finally did acknowledge it, they said it was transitory? And then once they finally did take action, they raised rates so fast that they busted the system. Should they not have been calling up Silicon Valley Bank and saying, hey guys, you got some massive, huge balance sheet problems here. You might want to address this as rates are continuing to rise. That's something here. I don't know if it's related to Lael Brainerd and the consolidation of the banks. And why were they bailed out anyway? Because we were told they should be bailed in.
We've got the problem, we've got the challenge coming up. This may or may not happen with BRICS in South Africa. And that's called debasing the currency. That's Gresham's law. And Gresham's law states when fake money enters the system, real money goes into hiding. And I saved up bags and bags and bags of real quarters and half dollars and dimes. And unfortunately, my mother spent it. And my rich dad, who was my best friend's father, said to me, that's the reason people are poor. They don't know real money from fake money. And ladies and gentlemen, nothing has changed. And what Andy is saying to you right now is we have trillions in fake, quadrillions in fake dollars ready to come back to America. If you think we saw inflation, Andy, are you saying we have more inflation coming?
Yeah, ask yourself, how do you pay off, in essence, $100+ trillion in Medicare, Medicaid, Social Security, and government military pensions? If you Google Medicare, Social Security shortfall, you'll see somewhere between 70 and 80 trillion dollars just between the two. Government military pensions and Medicaid are also on the docket, amongst other liabilities that are off balance sheet. Most of it owned to the U.S. public.
When they find out the garbage that Wall Street sold all these stupid teachers and their pension funds, he says the pensions will come down. We sit here on this, and people are still saying to little kiddies, you go to school, you get a job, you work hard, you save money, get out of debt, and save, get that 401k. And the 401k, what Andy is saying, is inflated like this Chinese air balloon floating over the skies right now because they kept interest rates so low. Is that what you're saying, Andy?
100%.
And the Great Reset is some rock is going to shoot that balloon down.
Yeah, and coming from a much higher level than it otherwise would have been if interest rates would have been let to be set by the market rather than by the central bank, which created the distortions. That's right. But we also have, as Janet Yellen mentioned, speaking of Janet Yellen, that we should expect many more bank consolidations, as she calls it, the 70% ownership of all of those things are held by the regional banks. 70% of the small business loans, 70% of the commercial real estate. A lot of this stuff is going to be reset in the third and fourth quarter at double the cost of money. We should expect a lot of strain and stress on the banks and more consolidations. But this time, I think she's going to let them be bailed in instead of bailed out. And if you think it was crazy then, just wait until that happens.
Explain bail in.
Part of the anger of bailing out Silicon Valley Bank and Signature Bank was that after the 2008 financial crisis, when the taxpayer was on the hook and bailed out the banks for their aggressive bets, in essence, that was made illegal. And bail in was put in its place. This is what happened in Cyprus. The bank depositors become unsecured general creditors of the bank.
If you have $1 million in a Cyprus bank, you now own 1 million shares of Cyprus Bank.
Correct. I mean, in theory, you're supposed to get your 250,000, but it's also worth noting that FDIC has $128 billion or so in capital backing what amounts to $18 trillion in U.S. deposits. It's not much of a backing, but in theory, yes, you get your 250, the rest goes into the kitty to bail in the bank.
The people who are savers will save the bank.
100%. And I'd like to just make one point. Most people are aware of this point, but in the inquiry by the Republicans after the bank failure, they asked Treasury Secretary Yellen, the representative from Oklahoma said, you bailed out these banks and that was supposed to not happen anymore. Does that mean you've had a change of heart? And if a bank fails in Oklahoma, my constituents will be bailed out too? And she said, no. It takes an uber majority of the FOMC, which is the Fed, the FDIC, myself, and the president. We've talked about this before, but that's setting the table for the real bank panic, because most people, the reason they've forgotten about this banking crisis is because just as always, the Fed came in and bailed everything out. Oh, no big deal. Everything's always okay. Watch what happens when one of these large regional banks is bailed in and everyone loses everything. Well, you were warned, but you didn't listen.
What Andy is saying, when they bail in, the savers will be the losers. I'm just keeping it really simple.
Yeah.
In a bail out, they save the savers.
Right.
In a bail in, the savers become the losers. They pay for the failure.
What's your most brutal life lesson?
My wife left me.
Oh. Previous one or current one?
Current one. 35 years. I've had enough of your bullshit. It hurt. About 3 years ago. When you have as much money as she does, she doesn't need you anymore. She is a rich woman. Talk about my best friend and I. So he and I pushed each other along. And we're like one little happy little family. So he sold his business for $2 billion. And the next thing you know, his wife, Lisa, took up Ferrari racing. And she fell in love with a Ferrari instructor. Her Ferrari instructor is a rich man today. Young, hot Ferrari instructor. We're just old men. All this money. Penthouses everywhere. It's a point where there's too much money. So the same thing my wife says, I don't need you anymore, bye. A lot of times marriage is survival, you need each other, which is important. Or you have kids. But once the kids are gone, out. So it's happening a lot. There's gray divorces. So people over 60 getting divorced now.